Hello and welcome to the Capital Spreads Weekly Update. Today is Wednesday, the 7th of July 2010. So the week so far has actually been relatively encouraging, relatively low volumes as well. Of course, we had an extended weekend in the US as they celebrated US Independence Day, and it would seem that the Americans have returned from their holiday with a renewed sense of optimism. Certainly sentiment just seems to have shifted to the positive side so far this week, and the FTSE is up around some 2% from where it finished off last Friday. So we saw a big rally on Tuesday, and that seems to have just about sustained itself. And the reason for this little bounce in equity markets just seems to be following that holiday in the US, investors seem to have returned to the market and had a look at the economic data that's come out recently, which of course has been some cause for concern. It has been worse than expected across a range of economic numbers, from housing data to sentiment numbers, confidence numbers, and PMI service numbers. But a lot of these numbers still point to an expanding economy. So the fears of a double-dip recession probably slightly overdone for the time being. So around these levels, we've seen a lot of buying. And the current situation is that the FTSE is just below 5,000. It's trading around 49.35 at the moment. The Dow still slightly firmly below 10,000, around 97.20. And on the currency front, you've got euro dollar at 125.95 and cable at 151.30. So there's certainly a little bit of an improved appetite for risk, but on gold, it's gold really that suffered as a result, and that's dipped below the 1200 level, around 1187 right now. And clients are trading the markets by buying into the recent weakness in equities. Sorry, that's the recent weakness of last week, and continuing to buy on this little rally. So they're very much long the FTSE and they're long the S&P. Interestingly, on the whole, they're short the DAX, so playing maybe a bit of a FTSE DAX differential there. On the currency front, again going against the trend of euro dollar, so they're short euro dollar, expecting maybe the recent dollar squeeze to be overdone and expecting the euro to weaken going ahead. But still, despite gold coming back a bit, they're long gold and have been picking up gold even more since it dipped below 1200. Also, on the whole, clients are long oil. So for the rest of the week, we've got a little bit to digest in the form of economic data. We've got tomorrow, we've got UK industrial production numbers, which are expected to decline, but on the whole, not too much, still remaining relatively positive. And then, of course, some important interest rate decisions. Not expecting anything as regards base rates moving around, but interest rate decisions from the Bank of England and the European Central Bank. Now, Bank of England will be slightly interesting because the minutes revealed last time that one of the members of the MPC actually voted for an interest rate hike. And that's the first time we've seen such a vote since August 2008. So that has contributed somewhat to the strength of sterling recently. But we do still expect a very dovish stance from the Bank of England, and it's going to be a long time before any other people possibly move to that more hawkish camp of calling for interest rate hikes. Similar situation for the ECB, really, expecting Trichet, the president of the ECB, to remain dovish and cautious about the outlook for Europe. And so that's the highlight for the rest of the week. What's this theme? The theme of the week this week? Well, the recent little bounce in equities. Have we reached a bottom of the declines suffered over the last few weeks? It would seem that, certainly looking at some of the valuations out there, they're very cheap at the moment, and maybe we have gone a bit too far in this sell-off. As investors, as mentioned earlier, they look at the economic data and see that it still does point to expansion, and overall the economies could possibly still grow despite the austerity packages that have been that are expected throughout many of the Western economies. So, has this provided a huge buying opportunity? Certainly our clients seem to think so, but yet it's difficult to say whether we've actually reached the bottom of this recent sell-off. So that's it for this week. As ever, do give us feedback, media@capitalspreads.com.